Hey, what's going on? This is Leo. So, CPI data just came out. That's the United States inflation rate. And we had a nice surprise this morning. Markets are rallying. Ethereum, crypto markets, all markets are up. The bond market, treasuries have dropped by, I believe it was 27 basis points. Coming in here on the CPI report, though, you can see how we have this nice trend down. Month over month, it's getting lower and lower and lower. If we take a look here at core CPI, we did peak out at core 6.7, and this October we saw it drop down to 6.3. So this is a nice surprise. It's a pretty strong signal that inflation has peaked and we are on a downtrend. So markets are reacting bullishly to that because it signals to the Fed that, hey, what you're doing is working. You can ease off the gas. You don't need to be as aggressive. So moving into December, it's looking much more likely that we're going to see a 50 basis point rate hike as opposed to a 75, and then a pivot sometime within Q1 where they just stop and they hold the rates where they are and watch inflation continue to come down. The other thing that's important about this is that as inflation gets lower and lower and gets closer to what the actual interest rate is, that makes it more effective. So, for example, part of it has to do with it being, how do I explain? If inflation was at 10% and interest rates were at 5, well, that's quite a big difference, right? But if inflation is at 7.7% and interest rates are going to be at 4.5 in December, well, now we're a lot closer, right? So we're getting the difference between the two is getting less, right? So that means that the interest rate hikes are going to be more effective. So overall, it's really good for the economy. Obviously, this was unexpected, and like I always talk about, unexpected news, the markets react violently to it. If something comes out like what just happened with this surprisingly low, I believe they were expecting it to be around 8.1, and then we came in at 7.7. Well, actually, I think, let's see. Yeah, so they were expecting it here under consensus 8.1 for October. We came in at 7.7, so that's a big surprise to the market. We weren't expecting inflation to have dropped that much. In fact, the only part of inflation that's really we're having problems with is housing, which that's going to take some time to come down, because once you raise rates on rent, it takes a little while for the rents to come down. Your landlord's not going to knock on your house and say, hey, we're going to lower your rent this month type of thing. It's more of, their lease has expired. They're trying to renew it. The housing market's slowing. They can't get somebody to rent the place at, say, $1,500. So now they've got to drop it to $1,400. So it takes time for that to play out. So I'm not surprised that is sticking. Moving over to the crypto market, obviously, if you haven't heard, we've had some issues with an exchange, FTX. From my understanding, basically what they did was they printed this coin called FTT. It's their native coin for their exchange, and they used that as collateral to one of their sister companies, Alameda, which is a trading firm. Basically, from my understanding, what the rumor is right now is that FTX took customer funds and they sent them over to Alameda, this sister company. In exchange, Alameda gave them this FTT token as collateral, but now the collateral token has collapsed in value, and there's no reason for them to want to give it back, because, well, why would I give you Bitcoin for collateral that's now worthless? This is the problem with companies that will print a collateral token of some kind, give it this arbitrary value that there really is no value there, and say, oh, well, here, essentially it's an IOU token, right? And what's even more suspicious about the situation is that Alameda, if you look at their books, apparently they don't have very much of anything other than this FTT token. They have billions of dollars in this FTT token, but the customer funds are who knows where. So who knows what's going to come of that. If it's just a matter of customer funds being lost, as upsetting as that is, I don't think it will be It's not as devastating, in my opinion, as the Terra Luna collapse because that was a liquidation event. So if there's not an active force on the market causing massive selling, the price isn't really going to go somewhere. It's like if you lose, for example, if you just lose the coins, for example, let's say you have a million Bitcoin in a wallet and you suddenly just lose those coins or they're stolen or something, that's not really going to be an event where you have a million tokens just automatically being sold onto the market, right? So it's just not as bad. It is bad in the sense that it brings distrust to the market, and it's upsetting because a lot of people have lost a lot of money because of it. But typically liquidation events are the more severe ones in the market, and it doesn't appear to be that's the case. So we'll just have to keep an eye on it and see what's going on. If we look over at Bitcoin, we're on the weekly time frame here, and what you'll notice is that we have just put in a new low. And so if we look at the divergence on the RSI, you'll notice that we're putting in bullish divergence on the weekly time frame, which is a big deal because typically whenever you see weekly divergence, whether it's bullish or bearish, we can go back to prior price action here. So if we look at just this most recent peak, you can see how we're putting in this bearish divergence on the weekly time frame. Weekly time frame is going to have a lot more weight to it than if you're looking at an hourly or a 15-minute or a 1-minute chart. So what this is showing to me is that it is highly likely that we are at a pivot point within the market, meaning that this is likely very close to the bottom. If we look over at Ethereum, we actually didn't put in a new low. I'm very convinced that the bottom for Ethereum was back in June. A reason for that is because of the merge. We've had something like, I believe it was 650,000 Ethereum would have been created if it wasn't for the merge. And instead of that, we've had a supply reduction of 4,000 Ethereum. And that force, if you're just looking at the two of them, these are the same periods of price action, bottomed in June, come over here, bottomed in June. Here, it's made a higher low, whereas Bitcoin made a lower low. And I think that's because of the triple halving event that took place on Ethereum. So it's holding up considerably better than Bitcoin is. But anyway, so getting back to Bitcoin, we're seeing the divergences here, and I can, go back in time and we can look for other periods of divergence to see how this plays out. So for example, here, you're making that higher high, but if you look at the RSI, you can see how it's losing steam. And so we're looking at these at the peaks of the bull markets and the bottoms of the bear markets. More so with the peaks, we don't see it, or at least I haven't seen it a whole lot on the weekly time frame. For bear markets, usually it just goes below, or the RSI goes below the 30 line, and then that's it, and it reverses. So I would say it's highly likely we are very close to the bottom if the bottom is not already in. We're seeing this quite a big wick off the low here. Looks like the low is 15,500. So we're seeing quite a big wick rejection off of there in combination with that divergence. So, is it going to put down another small leg, few $100, $500? I don't know. I wouldn't bet on it. The signs are that it's going to reverse, so I wouldn't be taking shorts there. That's how I would look at it. In combination with seeing how the technicals are telling us that, okay, it's very likely we're coming up on a bottom here, a pivot point within the market. Also, with the fundamentals of the economy possibly bottoming, seeing the downtrend in inflation, right? Because if you think about it, inflation is what's been causing the economy to go into a recession because the Fed has been having to raise interest rates in order to fight inflation. So if inflation is on a downtrend, and it certainly looks like that to be the case, and it looks like it's dropping fairly quickly, especially with this previous report. If we come in here in December and we are at 7.4, 7.3, and we're continuing to decline very quickly, it's just going to put more weight on that the Fed can ease off these interest rate rises. So looking at the fundamentals, the macro, and looking at the chart here for the technicals, those two are showing some confluence that we could be in for a fairly bullish 2023 and 2024. So until next time, I'll talk to y'all soon.